Welcome back, grade 12s. We are starting this segment with a very, very important calculation. Now, remember, with VAT, it is imperative for you to know how to do your calculations. So, let's look at the first calculation here. If I want to calculate VAT from my selling price, what do? Remember, you would take 14, which is your percentage of VAT, over 114, which is what? Your selling price plus your VAT. So remember, if I want my VAT, what do? I take 14 over 114 times my selling price. Now, if I need to exclude, if the question says, what was the selling price of the item exclusive of VAT? That means you want to remove the VAT from the selling price. You only want the selling price of the item. What do? You take 100 over 114. And in each case, notice my denominator is 114. Why? 100% selling price plus the VAT at 14%. Okay, so please make sure that you are okay with these calculations. Let's move on to the ledger account. Firstly, my VAT output account. Now remember, what did we say about VAT output? We said this one here records all instances where we are receiving money, right? Or where we are receiving the VAT, and this will therefore be recorded in the VAT output account. Therefore, let's look at number one, the bank entry. Do you see on the credit side of your VAT? So what does it tell me? That's my cash sales. Obviously, I've sold goods, and as a result of selling those goods, I have collected VAT from my customers, and therefore it's a credit to my VAT output account. Okay, remember, you're debiting bank with the total amount that you have received. You are crediting your sales and you are crediting your VAT output. Okay, so that clearly shows you that that's how a cash sale is going to be affecting my VAT output account. Once again, notice the journal from my cash receipts journal. Okie dokie, great stuff. Next, let's go to my debtors journal. In my debtors journal, I'm recording my credit sales. Once again, a debit to debtors control, a credit to sales, and a credit to VAT output. There goes. Why? Because I'm saying that these are credit sales. This is the amount of VAT that I've collected from my debtor. This VAT I owe to SARS. So remember, the VAT output account, yes, matriculants, is a liability account. It shows you what you have received from your customers and what you as an agent now owes to SARS. Okay, right, next one. From my general journal, drawings. If you're the owner, you are still subjected to VAT. Even though you may be the owner of a business, if you take anything, you also have to pay VAT. And as a result, my double entry, a debit to drawings, right? And what am I doing? I'm crediting my VAT output. So you can see you will debit drawings with the full amount, credit the trading stock with the cost price, and you will credit your VAT output with the percentage of the VAT that has been charged. As a result, these are all amounts that are due to SARS. Now, does this mean that there are items that are not going to feature on the debit side of my VAT output account? Certainly not. Let's look at them. When a debtor returns goods to you, this is old hat to you. You've done this transaction over and over and over again. The only component that you're going to add to it now is the VAT component. Now watch what happens. Now you are debiting your VAT output. Why? Because in this figure here, you had the total amount. But that's not what you owe SARS. Why not? Because your debtors have returned goods to you. As a result of which, you need to decrease the amount you're owing to SARS. And what do we do therefore? We will debit the VAT output account. There goes, there's the entry. In your debtors control, your contra entry is your debtors control. By the same token, if you have debtors who don't pay you, right? And if they don't pay you, then obviously after we make a concerted effort and we can't trace our debtors, they've just disappeared. Magicians, what do we do now? We are faced with the entry of bad debts. And what is the bad debts going to do? The bad debts is going to decrease the amount that I owe to SARS, as a result of which I have to debit my VAT output account. And then finally, what happens to this account here? Yes, you will debit your VAT output account and credit your VAT control account to transfer this account into your VAT control account. So clearly you can see it was cash sales, it was credit sales, it was the owner taking goods, it was debtors returning goods, it was writing off of bad debts, and then finally the transfer to the VAT control account. So you have seen clearly now how we go about drawing up a VAT output account. Don't go away because we are still busy. We'll see you in just a while.